We're going to bring in now a man who says that he's learned from the best of the best. He's here to give us his take on where to find value right now. That's Scott Black, president of Delphi Management, also a member of the Barron's Roundtable. You know, Scott, we talk about you really being a follower here of Warren Buffett, a man who has been able to find a tremendous amount of value out there. He's also got pretty deep pockets that may be helping out his stomach lining in times of volatility like this. I mean, how do you give advice to someone who really doesn't have the stomach for this kind of volatility as to where they can put money safely right now?
Well, for people who really don't have a lot of extra assets, probably park it in short-term treasuries until you see the volatility decline. But if you're a fundamentalist,
you don't think there's a bubble there?
Short-term treasuries, you don't earn much, but at least you preserve your capital. That's what I'm saying. I'm not talking about buying 2 to 10 years. I'm talking about 30 days until the tsunami passes here. Because obviously the stock market is reacting to every last piece of data. We have the macro problems in Europe. They really haven't gone away. We have the conflation of the Gulf disaster here in the Gulf of Mexico with the BP spill. But ironically, if you look at most of the data on the industrial side of the United States and even most of the consumer, notwithstanding this morning's retail sales, the U.S. economy is in an upturn. It's not a sharp V like 1982 coming off the bottom, but it's realistic. It's a 3.5% kind of growth rate. Factory durables, steel capacity utilization, rotary rigs, pick your poison. They're all up year over year substantially. So the economy is definitely improving in the United States. So if you have a 3 to 5 year horizon, as we do, there's some very good values out there at this point.
Yeah, and you're finding those specifically in MKS Investments and Cliffs Natural. Talk to me first about MKS.
It's MKSI. It's actually here in Andover, Mass. It's a semiconductor equipment company. They're a supplier to companies like Applied Materials, Novellus, and Lam. They make the vacuum chamber, what's called the gas induction nozzles, but they also have things for gas detection for homeland security. The company's revenues will be up about 100% this year. The stock is around $18. There's over $5 a share in cash, so effectively you're paying $13 for $2.35 in earnings. It's a 5.5 PE. There's no debt on the balance sheet. They'll earn about 16% return on equity. We just met with them in downtown Boston this week. Business is firing on all 8 cylinders. I don't think you go wrong at a 5.5 multiple.
So you also like, as we said, Cliffs Natural. Now they make pellets for the steel industry. I mean, that sounds pretty dependent on global growth.
But the steel industry has already upticked. You've gone from the low 60s into the low 70s, and actually from 46 to 73 in capacity utilization in the United States. Their pellet growth was 4.4 million tons last quarter, up over 100%. Pricing's up over 24%. They're going to earn close to $8 this year, which would be a record earnings for them, even tops the $6.77 on the prior peak. And it's about a 6 PE. Again, almost no debt on the balance sheet. It's a good way to participate in worldwide growth.
All right. Thanks, Scott, for joining us today.